Will Marches here, and I wanted to give an update on the How to Invest HQ portfolio. I want to go over the stock I added to the portfolio and just some quick notes on the previous holdings of the portfolio. And if you aren't familiar with the portfolio, this is just a small stock portfolio that's completely viewable by the public for free at any time on my website. And the plan is to add about $1,000 a month to the portfolio, possibly dropping down towards $500 over time. And the initial plan is to invest in about 5 total stocks, one per month, and then add to positions over time. And what this is meant to do is show a home-based investor how not just to pick stocks, but how to add to those positions over time. And I put out monthly, quarterly, and annual reports. The monthly report is mostly just focused on the new stock purchased or the position added to and why I made that decision. And the quarterly and annual reports will actually discuss performance, especially with the annual, we'll focus more on performance, and the quarterly reports will sort of focus on strategy and what the plan is for the next quarter. And this is, follow at your own risk. Whenever you invest in individual stocks, there's a chance that you could potentially lose all your money. So keep that in mind. So for March 2014, I ended up purchasing 12 shares of Zillow at $85.50 a share. And since then, the stock's trading down 1 or 2%, but 85.50 was about 5% off from recent highs. Zillow was up over $90 up until Trulia issued a pretty bad report, and Trulia is just a competitor for Zillow. They operate in the same space. Trulia did poorly, so investors kind of got spooked out of Zillow, but I don't really think that's an issue because if we look at the Alexa ratings, and Alexa is a service that monitors website traffic, Trulia had a really big drop last quarter, and as a result, they had a poor quarter report. Zillow, on the other hand, did not have that pronounced drop, and this was in the last quarter of 2013, and now Alexa indicates that both services are doing very well, and Zillow doing incredibly well so far this quarter. So, I'm not worried about Trulia. I take advantage of that pullback, buy into the stock at a small discount. And overall, I like Zillow because the simple reason that more and more of the real estate business, just like everything else, is moving online. And real estate's been very slow to catch on online just due to the complexity of buying and selling a house. There's so many parties involved that it's not as easy as going on Amazon and buying a product. At the house, you've got the buyer, you've got the seller, you've got 2 real estate agents on either side. You sometimes have a lawyer on either side writing up the contract. You possibly have a bank with a mortgage involved. All of these parties make an online transaction very difficult. But as time goes on and as Zillow's platform becomes more and more advanced, a lot of these professionals are actually moving on to Zillow. People are looking for houses online, and real estate agents are actually buying advertising space and putting themselves out there attached to these particular properties so that if someone's interested in a house, they'll be recommended to go through whatever realtor is paying for the advertisement. So Zillow is able to make more money off of the home buying and selling process as time goes on. So that's obviously great. There's a lot of money there. Home buying and selling is huge, and I think that Zillow is just the best position to take advantage of this shift. And additionally, Zillow is an expensive growth stock, but it's also had a long consolidation period. It's been about the same price since summer of 2013, and it's actually been as high as $100 a share in 2013. So the fact that it's been given 6 to 9 months to cool off is great. There's definitely plenty of room for this stock to run this year. And I especially think this is the case because traffic reports, according to Alexa, which again is a service that monitors website traffic, are great for Zillow. Earlier in late in 2013, when I was talking about how much I liked Zillow, they were something like the 53rd or 56th most popular site in the United States. Now they're up to 49, and part of that is seasonal, but that's a huge jump. To move up 20% in the rankings, or that's about 10%, depends if they were 53 or 56, I suppose. So, regardless, they moved up nicely, and their traffic is definitely up to record highs. So just a quick update on the previous holdings. When I started this portfolio in January, I bought 5 shares of LinkedIn This is up slightly. I'm happy with the recent company developments and their overall strategy. I'm happy with their bigger push into China, and I'm very happy with their expansion of allowing users to post blogs on LinkedIn. And what this refers to is that users are able to, for the first time, not just the quote unquote influencers, but the top like 25,000 people right now are able to post blogs and articles that anyone in their LinkedIn network can read. So basically, people are incentivized to post content on LinkedIn because all of their business contacts can see and read this. This allows people to establish their sort of expertise on LinkedIn.com, and that's going to give them access to either more business or better job opportunities, depending on whether they're a business owner or a business employee. And this content, of course, is surrounded by LinkedIn ads, and people on LinkedIn are on the LinkedIn platform, so any free content they can get that they can monetize is going to be great. And as I said before, users are incentivized to post this because it'll help build their reputation online. It could lead to job opportunities or new business. So LinkedIn's looking great. I'm happy with them. They've been up and down a lot, but that's just what happens with a high-priced growth stock. But I think they're well positioned to do well over the next few years. The second month's purchase, this was in February, is 44 shares of Potbelly, and they actually did not do nearly as well as LinkedIn. I'm not particularly excited about this position right now. I still like Potbelly overall. Nothing's really changed there. The problem with Potbelly is that same-store growth sales for the quarter four 2013 were really bad. And they attributed this to unseasonably cold weather, which is actually legitimate. The reason I say that is, if you've lived in the Northeast or the Midwest, you know that we've had tons of snow this year. It's been extremely cold. It's one of the coldest winters I can remember in my entire lifetime. I mean, we have had winters with more snow, but we just had another snowstorm, and we're in March now. So that could definitely hurt them. And the reason Potbelly is particularly susceptible to this is that about half of their stores are in either Illinois, Ohio, Michigan, Minnesota, or New York State. So between those 5 states, those are like the 5 states hit hardest by this weather. That's where most of their locations are. And then when you throw in Maryland and Indiana and those states around there, you're looking at closer to 2/3 of their total stores are in this polar vortex, bad weather, stay inside region. And while I do believe that this is a valid explanation for why the stock disappointed last quarter, the problem is that this whole polar vortex thing didn't start until December, maybe late November, we could say, but really not until December. So December was really bad. That hurt same-store sales, but January and February have been just as bad. And like I said before, we're in March now. It's still very cold, and we're still getting snow. So if one bad month in December was enough to slow down their growth, I can only imagine what January, February, and March, all being unseasonably cold, are going to do. They're likely going to report a really poor quarter coming up. And this is just, this immediate downside ahead is not appealing, but again, it doesn't make me think that over the long term, this stock's going to do particularly poorly. It's just going to slow down their growth a little bit, and it could drive down the price, especially next quarter if they report lower than expected again. So I may be looking to buy back in to Potbelly after, that price drops a little bit. And speaking of that, I do have some price targets now for the portfolio. And what it means is towards the end of the month when I'm looking to make April's purchase, if Zillow, LinkedIn, or Potbelly reach a certain price threshold, if they go down in price, I will be adding more to those positions or buying additional stock in that company in order to lower my average purchase price. So for LinkedIn, I'm looking at it for it to go to 187.50. I'm looking for Potbelly to drop to 19.50, and I'm looking for Zillow to drop to 77.50. And these are all detailed in my post linked in the description. And if these stocks are able to drop to any of these points, I will, promptly double my position, and that will be April's purchase. If by the first week in April, we're getting to the end of the first week, and none of these stocks look anywhere close to that price point, I'll just go ahead and move into a fourth position. So, go ahead and check out my blog post for more details. There's a little bit more discussion, especially on the strategy aspect, about either averaging down or how I'm going to make my next move. So I hope this video was helpful. Follow along, subscribe to my channel. I'll be putting out one of these videos every month.